Today's Monday, April 14th, and last week was indeed epic. One of the things we're going to talk about is what we refer to as a bull trap, but in general, we're going to talk about a bear market survival guide. On the screen, we've got the S&P 500 in a weekly chart, and so the last candle here on the screen is the one ending Friday, April 11th. Last week, we had an epic rally, and I think it was the 8th best rally on record. But what I really want to highlight is the fact that RSI going into the week was already signaling an oversold rally was very likely. And as impressive as Wednesday's rally was, that doesn't mean this correction is necessarily over. I want to highlight back in April of 2022, we also had RSI in an oversold condition and we got a nice rally. Not as impressive as what we experienced last Wednesday, but you can see how that played out. Just because we get a rally off of what we think is the bottom, it doesn't necessarily mean that the bottom is actually in. If you were to look in my personal library, you would find very few works of fiction. Most of the books that I own are a biography or some other work of nonfiction. Obviously, a lot about stocks and economics. One of the books that we're going to talk about is from William O'Neill, a classic indeed. In his book, he talks about something that he refers to as a follow-through day or follow-through signals. And the point is this: just because Wednesday's rally last week was epic, it does not mean that the quote-unquote bottom is in. Typically speaking, there is going to be a bottom, but really what we need to see is a bottoming process. And yet last Wednesday's rally was just one step. We would argue that the next most important step that we really need to see is what William O'Neill talked about as a follow-through signal. William O'Neill goes on to say that, remember, no new bull market has ever started without a strong price and volume follow-through confirmation. So let's talk about how this applies, and we're going to look at the Russell 3000 on the screen. You see that I'm highlighting the first day of the rally attempt. That was last Wednesday. And in particular, we want to look at days 2 and 3. So now I've got day 1 highlighted at that red vertical line, and you can see that days 2 and 3, the price is lower off of that Wednesday high. In addition, if you look at volume was higher on day 2, but not on day 3. So we would argue, according to William O'Neill's rules, that so far we have not seen a valid follow-through day. Now, as I'm recording this, the S&P 500 is again trading up, but as of a little bit shy of 11 o'clock, so far we're seeing lower volume. So we need to see both of these things in order for us to have some confidence that this rally can succeed. Otherwise, we're concerned this is a bull trap. So what is a bull trap? A bull trap is nothing more than a sharp stock market rally after a correction, sucking people in because you're afraid you've missed the bottom and I want to buy low, so I got to get in at the bottom. That is a fool's errand. That is not something we recommend at all, because you might very well just get sucked into a bull trap. So what I'm talking about is, as the stock market begins to rally, it's going to hit some of these resistance levels that is going to act as a barrier to prevent the stock market, or at least make it harder for the stock market to continue to rally. Now, right now, the stock market is trading somewhere in this range right here. Higher than Friday's close, but lower than Wednesday's close. So far, the market might be rallying, but we're not seeing a significant increase in volume. And again, we're starting to face some of this resistance where it might just push the stock market right back down. In addition, if we look at the VIX, we are still seeing very elevated VIX levels. We zero in, we can see that the VIX was above 50, and yes, it has come down, but we're still above 30, which is kind of the level where I think VIX is becoming a bit more subdued. So the futures market is still expecting very high volatility. So we would caution anybody from rushing right back into the stock market just because Wednesday saw an epic rally. So let's now talk about our bear market survival guide. And you know, if you've ever gone hiking in bear country, you know it is strongly recommended that you take with you some bear spray just in case you encounter a bear. Well, we would argue the same thing is true for your investment portfolio. Before you encounter a bear market, you need to have a strategy. We would argue that we are not yet out of the woods. And so if we're in a bear market, we might very well still be in it. So what is our strategy? What do we do next? As for us, we're going to continue to follow our rules. Remember, we manage money in a multi-strategy approach, and each one of our strategies has a defined set of rules. This is how we are going to survive a bear market. We're going to follow our rules that we designed well in advance of the bear. This particular model has exposure to 4 different equity models. It's got exposure to 2 quantitative strategies and 2 tactical strategies. What do? We follow the rules. Our quant strategies, as of Friday, have very little indication that they are going to flip to a buy signal anytime soon. So we will simply wait until we get those signals to proceed. As for our tactical strategies, we're going to do the same thing we always do. We're going to continue to scan through the market, looking for the proper setups. And what we're looking for is evidence that the trend is changing or that the trend is now positive. And we're also looking for evidence that there's a limited supply and an increase in demand. Let me give you an example. So this is the S&P 500. In particular, this is the bear market of 2022. Right here, this is an example of a bull trap. You have another example over here. The bull trap, where the market rallies, people think it's safe, the bear market is over, people rush in and the market falls apart again, putting in a new low. Market then rallies again, falls apart, but this time the market does not fall as low as it did before. Market rallies again, even puts in a new high, falls apart again, but doesn't move lower. It's above this high. And this time what we're starting to see is the market is oscillating and it's getting really, really tight. This is even easier to see on the NASDAQ. Let's switch to that. Again, 2022, wicked bear market. We have a bull trap. Market is beginning to rally. And over here on the right-hand side, the market is oscillating. It's getting super, super, super tight. And that is what we're looking for in some of our setups. Now, I'm showing you this setup in the broad market, but we're looking for these types of setups across all different types of sectors, commodities, single country ETFs, anything that's out there. We're looking for something that is along these lines. When we're managing money for people, we manage money with risk first. We're thinking about the risk first before we just go rushing in. The reality is you need to have a strategy before you enter that bear market. If you have any questions, by all means, feel free to reach out. We have capacity to serve other folks, and we'd be honored to see if we can be of service to you.